Hi, guys, and welcome to my favorite day of the week. And I can't say favorite because we've got some other surprises coming for you, but he's certainly one of my very favorite people to do this live show with because I feel like you bring a lot to the table.
Oh, thank you. Thank you very much.
So I'm going to warn you that this Thursday, because we're going to start having this conversation right now, that this very intelligent young man and strategy specialist has put together a very important piece on these mega IPOs that are coming about.
Yeah. A lot of stuff going on with them for
Yep.
sure. And it's finally kind of making the news cycle. You know, I think people are getting more worried about it or aware of it.
Well, you said something interesting before we came on air, which was when you very first started. So this is now more than a couple of years ago.
Yeah.
Right? That we were talking about mergers. Do you want to? Because he has a fresher memory than I do.
Well, yeah. So this was, me and Lynette, when we were having our one-on-one, you had mentioned, okay, you'll always be able to know when you're getting to that terminal end of a currency's life cycle because you just need to pay attention to all the mergers that start happening with these mega corporations on Wall Street. And it's really kind of what we've started to see. A lot of a lot of companies getting taken over by others, and these upcoming mega IPOs, the amount of liquidity or the amount of funding that they're going to require, not only for the initial IPO offer, like the initial offering, but to continue working as companies or continue going on as companies. So I think it's all kind of coming to a head. And yeah.
Well, I think so too. And I'll mention over the weekend, there is this movie. And if you guys have never seen it, if you've never seen it, you want to make sure that you do see it. It's so flippin' interesting. And it's called Gabriel Over the White House. And it was filmed in 1933.
Oh, wow.
So it's a very, very interesting year, right? So definitely watch it. But the reason why I bring it up is because if you look at the bar chart on the screen, what do you see? 5 trillion, 4.4 trillion, 4.4 trillion. Okay. In this movie, when you listen, and I watched it this weekend because I knew this soundbite was in there and I'm going to use it. And he says, and he was talking to global heads of state.
Okay.
And he said to these people, and now remember, this is after World War I, and there were a lot of, we funded a lot of development during that period of time, especially in Europe. They sent over a lot of their gold. And he's telling these diplomats and these presidents of these European countries, and you must pay back what you owe. Okay. And so, Mr. France, you owe us $100,000. They didn't even have the word billion then.
Right.
That's the point, because that's the beginning of this experiment. So when you see these numbers, 5 trillion, 4.4 trillion, it wasn't all that long ago that was so far away from where we were. It's not that these companies are worth that much money. It's that all of this have grown these companies and they are worth that much less. So in less than 100 years, we've gone from 100 million, 1,000 million to trillion. That is an indication of the loss of purchasing power.
Wow. Yeah. And it's like, you're right. It would be inconceivable for somebody to think a company could be worth $5 trillion. That's the worth of this company, $5 trillion. And when it comes down to is that's all just corporate debt, right?
It is. And it's also speculation because these are an IPO. So how do they know what the value is?
Oh, yeah, that's exactly what we go into in the video that's going to be coming out on Thursday.
Oh, yeah, totally. Yeah. This is just wetting your whistle for that. Can we see the next slide, please? Let's see. We'll get this up there. There we go. Okay, because this is hyperscalers and the CapEx surge. So this goes back to what we were just talking about. And Jessica actually found this graph. Good job. Good job. And what this is showing is the AI CapEx surge. So all the money that they're spending, all the debt that they're growing, all of the equity that they're issuing. Well, these large hyperscalers used to fund everything internally with the free cash flow.
Right.
Can't do it anymore. They need way too much. And by the way, what are their valuations based on? Do you know?
Well, yeah, I mean, it's definitely not based on their profitability because they're
Depends on, OpenAI.
right. They're not making
It's
any
based
money.
on the latest round of funding.
Yep.
That's what it's based on. The latest round of funding.
Wow.
I know it, right? So we don't know what they're worth. It doesn't matter.
Yeah.
Value, that goes back to the trillions.
Wow. And I mean, you see just from even 2004 to now 2026 how large that credit spread has become.
Look at this. And it's saying free cash flow fades. And the other thing that I find, kind of interesting is that while some listing agents have changed their rules, which I know you're going to talk about,
Yep.
right? Others want you to think they have not, like the S&P 500,
Right.
except that in their funds, they can be listed,
Right.
right? So they're going, look at how we're trying to protect you. Not really.
Yeah, you're right. Exactly. That was kind of funny too, because that really, since it's the largest of, I think, the like retirement funds, if they just outright came out and said, oh yeah, no, there's no, the restrictions are off on these mega IPOs, they can get included, 5 days after being listed. I think they're intentionally trying to subvert any of that backlash, because people were getting kind of freaked out about that. Like, oh, my retirement account. And they don't have any idea really what's going to be coming with these mega IPOs. If you've got a traditional, retirement account, something that is attached to these indices. Yeah.
Well, can we hear that soundbite?
One of the largest private credit deals ever. Apollo and Blackstone are coming together to basically create this SPV that then is going to raise debt from both Apollo and Blackstone, but also other investors. The money is going to be used to purchase chips, semiconductor chips that power AI. This most recent capital raise specifically will first be used by Anthropic. So Anthropic will lease the custom chips that Google and Broadcom have partnered to create. If you zoom out a bit, what it's basically showing us is that chips are really expensive, and Wall Street needs to come up with these very creative financing structures to be able to create the money to buy chips for AI.
There's so many things in that clip. Go ahead.
Well, I mean, yeah. So this goes right back to when we had our one-on-one a while ago. These companies are having to merge together to create the SPVs in order to have the conceivable funding for what these companies are going to require. Again, to have that value placed on them, or their evaluation for an IPO, and to continue operating, they need the chips. You know, so they and it's almost like there's no free market in that, because what if they're like, okay, great,
they're custom.
Yeah.
Right? I mean, they said they're custom chips,
right,
which means that they're made specifically for this person, or this entity.
They can mark it up as whatever they need.
Well, they can, but it's that circular funding.
Yeah.
Right? What could go wrong? Let's put this in the retirement account. After all, look at all the trillions of dollars that are in there, and who's going to complain about that?
Yeah.
But one of the things that I saw in this that you just kind of go, you can't make this up, right? If I wrote this, you'd go, that's science fiction. But in reality, so we've got a company that goes to another company and says, well, I want you to make me these custom chips, and it's circular. So we're going to take on debt to fund these, and that'll give you the money, even though you're not really OpenAI. You're not making any money, and we don't know if you're ever going to make any money, but you're certainly worth $4.4 trillion or $5 trillion or whatever. Could that be because the dollar's not actually worth anything?
Right.
But that's like, I'm going to give you the money to buy stuff from me.
Yeah.
That'll make my balance sheet look really good. I'm going to borrow it over here, and then I'm going to spend that money over here, which means if I need to pay back this money over here and for some reason inside of the circular bubble, something goes wrong, do you think you're getting any money back?
Nope.
Nope.
Not at all.
Yep. So really interesting. And is there any way, and I know this is kind of a big ask because Jessica is learning how to run this and Tom is sitting next to her. Can we just have that last little piece where she actually says that they have to create that money?
Financing structures to be able to create the money to buy chips for AI.
Yeah, because money is created from debt.
Yeah.
And you guys, we are all of us, including me, working for corporate debt, but I converted it into sound money
Right.
as quickly as possible.
Yeah. Yeah. No, it's very interesting for sure. And again, it just shows that it's a big dog pile on top of just trying to squeeze the last itty bitty amounts of purchasing power out of this corporate debt that these companies need to do before the terminal end of the life cycle of the currency.
And that difference between in this K-shaped recovery, I mean, trillions, quadrillions.
Yeah.
Why aren't we?
Why
We
not?
will be at quadrillions at some point in the reasonably near future.
Yeah.
Just like my $10 trillion Zimbabwe note. And it doesn't matter if it's physical or it's digital. This has absolutely zero value.
You can't buy anything with that?
Not even one egg.
Really?
Not one egg. Doesn't matter how many zeros it has.
Right.
It matters what you can convert it into.
Right.
So is there anything, because I don't get to the questions now, but is there anything else that you want to say to set up? You don't want to miss this on Thursday. This is really a good video.
Yeah, thank you. No, I mean, yeah, I think it's something that all I can really say is as these mega IPOs happen, I think it's going to change how people might look at the stock market if that's that consumer confidence piece and it begins to get even weaker because of what corporate America is doing, but it's because they have no other choice. Right? They need to have these mega IPOs. They need to continue this, as you said, circular funding of corporate debt because they need to be able to ride out this coming currency reset as well, right? That's what banks are doing it. These mega corporations are doing it. Everyone out there that we speak to needs to do it, and we actually have a strategy to allow you to do it.
Okay,
So-
do what?
Survive this coming reset.
Oh, yes,
Yeah.
okay. Yes, we do.
So
we do.
So the banks have their strategy. These mega corporations have their strategy. As Zang International, we have our strategy to allow everyone out there, just at the very least, have the conversation with us, right? To see what that looks like to survive the coming currency reset. Because
Now, I want to talk about this, and I'm going to put them on the spot here because
Yeah.
we have not had this conversation yet. Okay. So, keeping in mind these mega corporations or any entity on the stock market, take your pick.
yeah,
Where could that possibly fit inside of the strategy?
well, if you're talking about like how if people have actual like stocks right now.
No. Let's
Okay.
say they don't own any stock at all
Okay.
at this point in
Right.
time.
Gotcha.
Okay.
Gotcha. Yeah.
And we're in the melt up phase. Where could what's happening in the stock market fit into the strategy? I probably shouldn't have asked him this.
No,
I
it's
didn't
okay.
warn
I mean,
him.
'cause
I
I'm-
didn't even think about it, but it makes a lot of sense because really we want them to know, and we're all together. So I want you guys to know this. You can see we talk to each other all the time.
Yeah.
He knows where I live. I don't know where he lives, but I have his address.
You do have it. Yeah.
Right? So we always come together to make things better and better and better. And one of the ways that we future-proof the company is by working like this so that I get to share share my knowledge with him, but also you have a different perspective than I do. So that brings in, I mean, we learn from each other. And we all work together, not just the two of us, but really, we have a great group here at Zang International, and we all work together. So I'll give you a minute to think.
Yeah, well, so I was thinking exit strategy, but you're talking.
No, I am talking exit
perfect.
strategy.
All right.
So you're right.
Okay,
you're
good deal. Yeah.
Keep going.
So yeah, that's part of, again, you look, you can buy metals from plenty of different places, but as far as I've ever seen, nobody has an exit strategy like we have here at Zang International, where it's like, okay, what do you turn that strategy into? What do you turn your portfolio into?
What do you turn your sound money into?
Your sound money into on the other side of that reset when the smoke clears, and we can see which of these corporations.
Do you see why I'm so proud of him? Because he knew it, and I did not prep him for this. No crossies count. I raised my right hand to God. No crossies count. That's it.
But yeah, and then so we can see which of these companies is going to be left standing, and therefore ride that market back up, because it's going to crash. It has to get to its true fundamental value, right?
Right.
And nobody can perfectly time the bottom, right? That's just luck.
That part's luck.
Yeah.
All we're looking for is that accumulation pattern that lets us know that the big money has identified that undervalued asset.
Yep. Yeah. And then so that's part of that income producing asset that, again, you can turn this into an income producing asset that neither you nor your heirs can outlive in some cases.
Because what these guys are really doing is they're creating the money by creating a mountain of debt. That's what they're doing.
Right.
But this debt bubble has already popped. And so all that's doing is pushing that debt bubble bigger and bigger, which means that when it becomes apparent to the public, I don't know how much bigger than 2008 it's going to be, but it's going to be a whole lot bigger because there's a whole lot more garbage that was pushed into the system.
Yeah, absolutely. And that's part of it too, where we're at in the awareness stage, right? It is an unfortunate thing where it's only when sometimes it's too late, like everything's already in motion, that the general public starts to be like, oh, this is a problem. Well, there's no stopping it, right? That train's already left that station.
And there's no time to get prepared.
Right, and there's no time.
There's no time to get prepared. That's the problem.
Yeah.
Right? We get to a point where nothing you can do.
Yeah, exactly. So I definitely do view these mega IPOs, though, as a very telling sign of where we're at in the 100%. Currency life cycle. Just purely, even if we're just looking at it from a numbers perspective.
Oh, it's ridiculous.
Yeah.
I'm going to loan you money. You buy stuff from me, and then I'll turn around and buy stuff from you, but it's all borrowed money between the two of us. So it makes us look great because, after all, now I'm selling more, you're selling more, everything is hunky-dory until it's not. Because if they don't have the free cash flow to service this mega debt, and things don't go perfect, because this is a big experiment. I'm not saying this stuff is going away. I'm not saying Anthropic is going away. Right. But what I am saying is I do not have clear visuals into these corporations to know whether or not they're going to survive this.
Right.
I do, however, have gold to hold my purchasing power so that when we see who will survive, all of that fiat money inflation will be burned out. And so we'll be able to take our gold and convert it into those entities that we know can survive. Because there's so much stuff that's done off balance sheet, but this is like open, but people don't understand it. But it's incestuous, which means that if anybody inside of this big loop, because it's not two entities, it's a handful, but it's not thousands either. It's a handful of these mega corporations that are now incestuously intertwined. And by the way, you guys, even though a lot of this is debt, they're also incestuously intertwined into the banking system where you have your savings account.
Right.
You know where I have my savings account?
Yeah, right.
Not in the banks.
Money.
Right.
outside of the blast radius of failure of the fiat system.
Yep.
Right, because that's really what it comes down to. If you've got, people think of it as money in the bank. It's not even your money, right? You
think it is. Well, it is corporate debt.
Right, exactly, and you're just lending it back to the banking institution that's lending it to these companies so that they can lend it to each other. I mean, it's.
Does any of this make sense to you? Because if your head is swimming, you understand it.
Yeah, right, exactly.
Right?
It's like this giant. I don't know what's that thing, the Ouroboros that just eats itself, like the giant snake eating itself type of thing. Yeah.
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 Actually, yeah, you're right. It is like an Ouroboros.
I think that's what
I
they
did
call
not
it,
know
yeah.
that was the name. All right. So that's it for today. This was fun today.
Yeah, super exciting and good questions.
Great questions. Great team. Great community out here. Yeah. Thank you guys so much. And just remember, let's make a positive difference in this world for everybody. There's enough room. There's enough abundance. There's enough wealth. Let's all come together and make this world a better place. We can do it. And until next we meet, no matter where you are in the world, please be safe out there. Bye-bye.